So over the past few days and weeks, I've seen a lot more people, economists, analysts, journalists, groups, websites, whatever, start to chime in about where the housing market is headed. And a lot of people are now saying, hey, we are starting to see things kind of go or move towards the other direction. So instead of going up, we're starting to see some little changes that suggest we're going to see something happen the next little while. So welcome to Housing Bubble 2.0 News of the Week, or as I like to call it, another episode of As the Housing Market Turns. Randy Patrick here, putting the realism back in real estate. So we're going to check out what some of these groups are saying today. But first of all, if you've not actually watched my 5-video playlist on the top 10 reasons why we will have another housing crash and crisis, I suggest you do so. It's a playlist right here in my channel, and I've got an accompanying document you can download. So again, go to housingbubble2.com, download my top 10 reasons why we will have another housing crash and crisis, and you can check that out and read at your leisure. All right, so what we're going to do today is we're going to talk about the 50 housing markets that are turning ugly, according to GoBankingRates.com. Now, obviously, GoBankingRates.com is a website that's out there, and if you're looking for mortgages or financial information, etc., they're going to be a sort of portal to point you in the right direction, of course. But they also, from time to time, produce these sort of I guess you could say reports or analysis from their perspective of what they think is going to happen or what's going on in the housing market. So this one just happens to be the 50 housing markets that are turning ugly. Now, according to Go Banking Rates, it doesn't mean that the market's headed for a crash, but in some places there could be more at risk of a downturn than others. They basically have a formula from which they, I guess you could say, figured out these 50 locations. They identified 500 locations across the country and looked at ones that had high foreclosure rates, underwater mortgagers, houses that are worth less than, that's what underwater is. They did, looked at changing median home prices, number of days on market, etc. So basically, price cuts, whatever, and they came up with their top 50, or in this case, bottom 50, if you think about it, list. So I just want to let you know that it was, done with some sort of calculation. The weighting of that, I have no idea. So here we go. We got number 50, Fort Myers, Florida. Now I'm going to, as I mentioned, a lot of these locations are going to, I guess they're going to be here because their foreclosure rate is larger or greater than the national average. And there's also some underwater homes as well, too. Realize that there still are properties and locations throughout the country that haven't fully recovered from the previous housing crisis. So some locations have such high appreciation and hit the bottom really hard. They're still kind of wallowing in a bit of their misery. But Fort Myers is number 50, so down the road from me here. Number 49, Newport News, Virginia. Number 48 is Cumming, Georgia. Number 47, Toledo, Ohio. I can see that being stuff happening in Ohio. Number 46, Naperville, Illinois. Definitely Illinois is going to have some stuff in there. Number 45, Sarasota, Florida, which is kind of surprising because Sarasota being a little more affluent area on the west coast of Florida here. Number 44, Fort Lauderdale, another Florida location. Next one here will be number 43. Menifee, California, and I've not heard of this location, but basically Menifee has the third highest foreclosure rate among the cities on this list. That's probably why they're in this number 43. Number 42, Tuscaloosa, Alabama. Higher percentage of homeowners with negative equity, and 12% mortgages are underwater compared to about 8% nationwide. The foreclosure rate is slightly higher in Tuscaloosa than across the U.S. So we've got a combination of a couple things that are putting them on this list. Number 41, Wilmington, Delaware. And number 40, Naples, Florida. Yet one more location. Again, Naples more affluent, but we can see some changes happening there the next little while. But first of all, if you're not already a subscriber to my channel, please do me the great honor of subscribing. I'd appreciate that very much, so thank you. And secondly, if you think you're a subscriber or thought you've subscribed before, if you could hit that subscribe button once again. I've had, I guess you could say, every video I talk about this, I've had subscribers just fall off for no reason. You're not getting notifications, etc., etc. So if you could just smash that subscribe button one more time, I would really appreciate that. So thank you. All right, number 39, West Palm Beach, Florida. One of the things I noticed prior to the COVID pandemic was that a lot of pre-foreclosures were starting to pack up in West Palm in Palm Beach County, which of course is where West Palm Beach is. So you always think of Palm Beach as being affluent as well too, but obviously changes are happening in that area. Number 38, Waterbury, Connecticut. lots of stuff happening in Connecticut. A lot of homes are over leveraged in Connecticut. There's a lot of pre-foreclosures there as well. 37, Plainfield, Illinois. You're going to notice there's going to be some common themes of locations here. Florida, obviously, Illinois with some of them as well too. Bakersfield, California. Foreclosures and underwater mortgages are bigger compared to different locations in California. Jacksonville, Florida, yet one more. Jacksonville is Florida's largest city on average, and what that means, its physical footprint is really big physically, and it has a lot of people there as well too. So Jacksonville is a market that's susceptible to a lot of things happening. Orlando, Florida, well, here we go. Clearly, you know, with the pandemic and all the shutdowns, really affected the travel and tourism industry, among other things in Orlando. We'll see if that comes back, but that's obviously a place where we're going to see some problems. I can look at the foreclosures all day there. McKinney, Texas. So really, this location is 30 miles north of Dallas. I guess you could say prices have fallen recently, and they have the highest percentages of listed homes in the nation with price cuts among the cities. So people are reaching for the stars and having to reduce to get things sold. So that was part of their criteria as well too. Let's see the next one here. Number 32 is Somerville, South Carolina. So we see a fairly decent size of underwater mortgages. And next one here is number 31, which is Annapolis, Maryland. Maryland does have pockets of locations that do have problems as well, and obviously Annapolis being one of them. Number 30, what do we got for number 30 here? All right, Stamford, Connecticut. So yet one more in Connecticut. You know, this is one of those weird kind of states and locations, because there's probably people who are leaving New York City because they want to go to the city. So Connecticut could be seeing a resurgence in people moving there. However, we still have some legacy and current level of pre-foreclosures that are growing in that location. Champaign, Illinois. Obviously, this is where the University of Illinois is. And again, foreclosure rate and percentage of homes underwater are always greater than national average in Illinois locations. Port St. Lucie, Florida, yet one more. It's on the coast, the East Coast, between Miami and Orlando. There we go. Bradenton, Florida. Bradenton is just south of me and just north of Sarasota. It's just before you hit Sarasota. So clearly, you know, it's got a good share of underwater mortgages and lots of price cuts apparently in that area. So people are trying to go up, and they're having to come down. Ocala, Florida, underwater mortgage is 10.3%. A pretty good foreclosure rate, higher than the U.S. average. So there's what's happening in Ocala. Dayton, Ohio. So Dayton actually has a ton of underwater mortgages. Look at that, 27.6%. And they will have a higher national rate of foreclosure as well too. Lehigh Acres, Florida. Lehigh Acres, Florida is actually across from Fort Myers, on the east side of I-75. So Lehigh Acres did have a lot of problems back in the day with the first housing crisis, with respect to a lot of homes being built that couldn't get completed for various reasons I can talk about in the future. Rockford, Illinois, yet 21% underwater homes, pretty high national foreclosure rate as well too. Mobile, Alabama. Yep, Alabama seems to be getting hit hard with some of this stuff as well. Cape Coral, Florida. So obviously we had Fort Myers, number 50. We just saw Lehigh Acres. Cape Coral is just above the river, you know, above Fort Myers. So obviously underwater mortgages, and obviously, you know, price cuts in homes, and obviously having, you know, their fair share of foreclosures as well too. Fort Pierce, Florida. So Florida seems to be dominating this list, if you guys haven't figured that out yet. Here, number 19, Suffolk, Virginia. So obviously we've got national average comparisons. Real estate markets face other problems in the city. High percentage of underwater mortgages and high foreclosure rates for that area. Laurel, Maryland. So it's between Baltimore and Washington, D.C. 13% of mortgages are underwater compared to 8% nationally, and again, higher foreclosure rate than national numbers. Joliet, Illinois, yet again, one more location with high underwater and higher than fourth highest foreclosure rate among cities on the list. So we can see a theme here. Valdosta, Georgia. Valdosta actually is just above the Florida-Georgia state line on I-55. I-75. And, you know, it's just a tough area to, you know, I guess right in between there. So that's what's happening in Valdosta. Number 15, what do we got for number 15? Decatur, Illinois. Underwater mortgages, 20.4%. So pretty significant there. Elgin, Illinois, underwater almost 12%. And 20% of homes listed had price cuts, so something's happening there. Riverview, Florida. Riverview is on the sort of southeast side of the Tampa Bay metro. So again, they're going to have 25% of homes have had sales cuts compared to the nationwide average. And we've got a fair number of foreclosures in this area as well too. Atlanta, so we've got underwater mortgages 8.8%, home prices dropping a little bit, and foreclosure rates higher than national average. Remember, again, this is their calculations of what they're saying. There may be locations that you're aware of in your own area that are not on this list for whatever reason. So again, I don't know the weighting of the calculations here. A lot in Oklahoma. I wonder. Yes. Okay. Here it is. I thought maybe it was a suburb of Oklahoma City. Has the fourth highest percentage of underwater mortgages of the city on this list, so 25.7%. And the foreclosure rate is higher in the southwestern Oklahoma city than nationwide. So we've got some problems going there as well, too. Hampton, Virginia. So basically, that's what we got in Hampton, Virginia. Pretty high underwater area, so that's why it's made the list. Aurora, Illinois. Again, fourth highest percentage of homes with price cuts. Foreclosure rate and underwater mortgages are higher than the average as well too. So that's all added in there. Bridgeport, Connecticut. One more area in Connecticut, Stamford, Bridgeport area. As I said, I think this is a really interesting location for some opportunity in the future. You're going to have higher priced properties there, but a lot of them are having some issues underwater and foreclosures as well too. So Norfolk, Virginia. So we seem to be hitting Virginia quite a bit lately. So obviously underwater mortgages there. Miami Beach, Florida. So yeah, so Miami Beach, obviously it's technically classified as a different city than Miami itself. And basically we have a lot of underwater mortgages. Price changes have, apparently what they're saying is going down a bit. Clearly, we just had some issues with some condo collapses going on, in the north part of Miami Beach there. So we'll see how that affects the market. Could people be going, hey, I need to sell and get out now of condos because they're feeling, not feeling safe, whatever. We could see that happening as well. That'll obviously be determined as the next few months come into play. Baltimore, Maryland, always a tough location. Baltimore has a huge number of underwater. It basically has the biggest percentage in increase in median home price for the past 2 years of any city in the list. However, Baltimore saw a drop in home prices over the year, has the higher percentage of homes with price cuts, third highest percentage of underwater and mortgages in the study. And also, I can tell you that Baltimore area has a ton of pre-foreclosures, foreclosures, etc. It's just a tougher location, especially in the city core. Columbus, Georgia. Okay, underwater mortgages, 22.2%. It's on the Georgia-Alabama line and double the foreclosure rate nationally. Portsmouth, Virginia, again, almost 20% underwater mortgages, highest. It actually has, this port city in southwestern Virginia has the highest foreclosure rate of any city on this list. Did not know that. So again, it's per capita. So it's got 1 out of 730 homes. So that's the rate of foreclosure. There are other locations that are going to have, a foreclosure count and a foreclosure volume that are much higher than this. But from a ratio perspective, looks like this is the number one location in the country that actually had for a foreclosure rate. All right, number 2, Lakewood, New Jersey. Again, 70 miles south of New York City, seen prices tumble, homes stay on the market twice the national average, and the foreclosure rate is twice the national average. So that's what's going on there. And the number one location, according to Go Banking rates for the 50, housing places that are having a crisis, Peoria, Illinois, looks like it's had a negative price growth. It's got over 20% underwater, and it's pretty high with respect to, as you could say, the foreclosure underwater mortgages and foreclosure rates among the highest on this list as well too. So that is your scoop with respect to what's going on according to Go Banking rates, the 50 places that are sort of primed, I guess you could say, for a housing crisis or issues. Now, that's why when I look at this list, I'm thinking, well, where was Cleveland? Well, we saw some Ohio lists, but where was Cleveland? It's a big city, lots of pre-foreclosures and foreclosures. Where was Chicago? Same thing, massive location, massive number of foreclosures. Greater New York area, you've got the different burbs in New York City, also New Jersey. You've got Nassau County and Suffolk County on Long Island, which have a ton of pre-foreclosures. As I mentioned, Miami itself, St. Louis. These are some big name, larger populated cities that are having significant problems with pre-foreclosures. But I guess based on how they're doing their calculations, the foreclosure rate, even this is where, because the population is so great, The foreclosure rate may not be as obvious, but the volume, consequently, because big city, more people, and there'll be more foreclosures. So the net number is going to be huge. But I guess the ratio is that it's not going to play into the top 50. But doesn't mean there's not going to be any problems there. And as I mentioned, I've done this before on the Foreclosure Tour of America and whatever. Like, these are locations that have, tens of thousands of pre-foreclosures kicking around. I mean, I've got some contacts in Chicago that are involved in the data services business, and their expectation is, they're probably at 40 to 50,000 right now. Virtually nothing's being reported. Expectations that's going to go to 70 to 80 once everything opens up here. Greater New York area. I mean, again, one of my foreclosure tour videos a while back, it was looking at almost 30,000 in the greater New York area, and again, we're just talking data services that you can purchase on a monthly basis. And what I've learned about the data services business is the fact that they don't put all the data on there. Okay, that's the interesting thing. So you start looking at things, you go, well, this isn't too bad, but sometimes these data companies that produce pre-foreclosures or auctions or whatever they're showing you, what they do is sometimes they drop off. So if a case has been, say, a pre-foreclosure case has been sitting around for 2 or 3 years, it may drop off because there's been no activity. So you look at the current number of distressed properties, it's going to look better than it really is. So I guess that's kind of the point here. So ultimately, I guess you could say, rolls back down to the data services, who you're getting it from, what they're producing, how they're producing it. Everyone's probably different. So this is why the distressed property number, the pre-foreclosure number, is such a difficult number to actually get our hands around. And that's why I've talked about this for many months now, and the fact that the numbers that we see mainstream media talking about are really based on, a focus on forbearance. They don't really tend to talk about what's behind the scenes or even engage that. That's why we're going to be rudely awakened and shocked when stuff starts to really kind of move along here and all these moratoria start to unravel, etc., kind of like what they're doing now. I think we're going to be very shocked, and we're not going to have this recovery that all the people think. And there's going to be opportunity from buying primaries to do investments, whatever. And that's the whole point. So just realize that I just put this video out because I just think it's interesting that everybody's going to have their spin. That's what it boils down to. So I know you out there, you're watching all these videos, all these other talking heads, people, whatever, economists. Who do you believe? I get that. I actually understand where people are coming from, going, this person's saying the market's great. This, website, this group. Well, I look at it going, what's in it for me, motivation, etc. So if I have a company that makes money when mortgages, are bought and sold in the open market and people buy houses, yeah, I'm saying the housing market's great. For me, my perspective is, I think more people can be happier with affordable housing, that there's more selection, more people can actually buy houses, and life moves along a lot better and a lot faster. So I'm more for, I'm not, people, I guess you could say I'm not for a crash, but I'm for a correction. And as I saw what happened last crash, I just know that what I've seen over the years, and I've talked about this many times, we're really, same thing's happening again. Just how it's being played out, how it's being controlled, how it's being managed and manipulated. So that's the difference here. So there's more fingers in the pies and more people trying to work things in their favor. And also, one thing I do want to point out, what have we learned over the past year, 18 months with respect to narratives on anything across any sort of news media, social media, politics, issues, whatever? My perspective is the more people try to push a narrative and really focus and make you look over here, it's because something is on the other side they don't want you to see. And I really feel that's what's happening to the housing industry right now. So anyway, such is life. But that's the Go Banking Rates situation. You can see that, Florida, how many locations were in Florida? A ton. What have I always put up here the past few videos? States with single-family rental companies own the most properties, Florida. So we're going to see all those locations that have been having issues. We're going to see people jumping into and trying to buy, especially if it's in the southeast locations, southern locations especially, all right? How much distress volume? Going back to my point as to how to quantify this, so it's difficult. I'm thinking, what I'm hearing, I'm looking at minimum 4 million foreclosures. We hear maximum of 10 to 11 million. We don't know. Can this volume make a difference to our housing prices and our opportunities and people wanting to live in homes? Sure can. This is what Wall Street's waiting for. We have to get ahead of the game and get ahead of Wall Street to get our hands on these properties. So I know people will comment and go, well, you know, Randy's friends are going to all buy this. All the big investors are going to buy this. Well, they're going to buy this if we don't take action. They're going to buy this if we let this happen. You know what I mean? Like all this discussion, some of the, I think the real baseline purpose here is to lull everybody into this false sense of security that the market's great, properties are going to go up, so don't even look at what I'm talking about here because it's nebulous at best, right? I'm making this stuff up. It's not going to happen that way. You're not going to want to get involved. You're not going to want to purchase cheaper prices. You want to buy big and buy expensive, and that's what they want you to do. So really, this is the whole point, is that there'll be headwinds. We're seeing them right now. It's don't look over here, look over there. That's what's happening in the housing market. It's up to you whether you want to believe this. How do I know there's differences in price points? Well, look, this is my MSA, Tampa, Clearwater, St. Petersburg MSA down here. Just every month I put this up. The median sale price of a single family home is $322,900. A median price of a short sale, even though not many get done because not many are on the market for reasons I can talk to you about ad nauseum here, there's a big difference in equity right there. And this is just pedestrian short sales being done on a retail basis. This isn't even guys like me who know what they're doing, working the deals and getting better discounts. So that's the big difference we got going on there. So this is the reason why that they don't want you looking at this or doing this, because they know that there's going to be cheaper properties. They know that if we work them, we can get them cheaper. But you know, if I'm a lender, do I care about that? No, I want you to buy retail. I want you to, you know, I want this narrative to keep going. So you just keep spending, and I make a lot of money if I'm the lender. All right. So that's the way it goes, guys. So again, if you want more information, I'll hook you up on these training courses. So give me a shout for sure. Just reach out to me. All right. I'll tell you how to engage the distressed housing market. Send me an email with your phone number so I can call or text you at randy@luxuryshortsales.com. So again, if you're looking for to see what's happening in your neck of the woods, go to gethousingdata.com. The reason being, all these foreclosures and distressed properties I talk about, you can quickly go in and see what's happening in your backyard to see what the opportunity is and actually validate some of this information that Go Banking and Rate has talked about. So as I mentioned, you know, everyone can spin it and calculate it how they want for whatever reason, for whatever report, etc. But the whole point is that we're starting to see more and more groups going, hey, maybe things aren't as rosy as they seem, and we're at this point right now where we're kind of in between. For the eviction moratorium is coming up at the end of the 31st of July. The forbearance stuff's popping through shortly. So see, we got a lot of things happening the next little while, which I think will make a difference. I think people behind the scenes are getting scared as to what really could happen in our marketplace. So keep that in mind. Reach out to me, guys. Thank you for the views, likes, comments. Share this video with your family and friends. If you're not a subscriber, please subscribe, and look forward to speaking with you guys later on this week. See you later.